Finally, this evening, the South African rand remained stable on Monday as investors anticipate Finance Minister Enoch Godongwana's upcoming budget speech. Now, analysts are focused on Wednesday's presentation, which will outline government spending, revenue strategies, and revised economic forecast. Furthermore, on the local front, the rand was trading at 18 rand and 36 against the US dollar, close to its previous close of 18.35. Analyst Antonio Santori from Cartesian Capital shares today's market insights.
The rand has weakened slightly today. There's probably a bit of apprehension ahead of the budget, which is expected to be quite conservative without anything too radical on the expenditure side. But the market will want to see how the state is going to raise revenue and attend to the budget deficit so as not to let debt to GDP get out of control to higher levels. Does it mean higher taxes, for example? And what will that mean for economic growth? They've got to address various issues, and the market is a bit uncertain how they're going to address some of the issues like the withdrawal of aid from the USA, issues on the parastatals like Transnet, which require significant funding, and then how they would start funding NHI, because that's something that's clearly very uncertain at the moment. And then on a more longer term and global scale, trade wars on issue, which are a Trump strategy, and that could impact the rand negatively and other emerging market currencies as well. Or if there's geopolitics that come out of control, investors move to the safe haven status of the dollar, and that could lead to rand weakness. But the positive side for the rand is that real yields are quite attractive in South Africa, with bonds at about 10% and inflation around 3%. So there's a pull and push on both sides, something positive and negative. But in the short term, it's just the apprehension on the budget. How are we going to fund the economy without creating a huge budget deficit and affecting the debt to GDP level, which already stands at 75% of GDP?